And joining us now here on Market Talk as we wrap up the week of trade, we are joined by Naomi Blohm, Total Farm Marketing up in Wisconsin. Naomi, good to talk with you again. Hope you're doing well.
Yeah, it's doing great, and thanks for having me.
Appreciate the time, Naomi. It's been an interesting week in this trade, I must say. I know Friday we kind of wrapped up a little bit of a move in the soybean complex, some strength there. Corn just kind of chopped around though, was relatively firm. Wheat kind of the same, a little bit lower. I know the grain deal extension was the main news item. It felt like in the trade here this week. Overall, 1,000 foot view before we really dive in. What are your thoughts of the trade this week?
Well, I would say big picture, everything is still just range bound and holding very critical 2 year support levels. So we have beans, of course, kind of in the middle of a short term range here of a sideways pennant flag formation, corn holding that 2 year uptrend, wheat holding the 2 year uptrend, and holding that $8 level. I think that's really important. I really liked how the wheat market today. This week, even though they have the extension of the trade deal, the market only fell a little bit,
Hmm.
but dug in its heels at that $8 level because I think we're just still really aware that within the world for all of the grains, we've got tight ending stocks yet. And of course, with wheat, we have not a perfect crop out there in the world again, with the Argentina crop almost cut in half, and now the Australia crop with the quality concerns. So there still is a friendly story to be told. But while we're waiting for some fresh news, markets just have that tendency, like you said, to chop around a little bit.
Yeah, and I know the wheat market specifically. I think we'll start there. You mentioned it kind of holding that $8 level, it feels like. And you alluded to we got the dryness concerns, that winter wheat crop in the southern plains, central plains. I've heard a lot of reports from farmers here this week and just how poor that crop looks. You throw in Argentina issues,
Mhm.
Australian issues with too much rain there. So even with the grain deal, it doesn't feel like that's done enough damage here. And looking at wheat here, it feels to me that this $8 level is going to be a pretty strong support level. It just bears watching how high could we take it, or will we stay fairly range bound and through maybe the end of the year as we get into a quiet time in the markets, Naomi.
Yeah, I would agree with the range bound sentiment, but I really like being a buyer of wheat here at this $8 level. Seasonally, once we come back from the Thanksgiving holiday, wheat prices have a tendency to work a little bit higher. And then, of course, we'll be watching every single weather forecast along the way. And as you were alluding to with the United States farmers, 75% of our winter wheat crop is in a drought right now. That is significant. We still have American wheat stocks in each category of wheat. Our ending stocks are cut in half from just years ago. So we're not fixed. We're not out of the woods yet. And global demand for wheat continues to be strong. For the past 2 years, we have not been able to produce enough wheat to meet demand, but we've had that cushion of large ending stocks to kind of lean on. But that ending stocks pile in the United States and globally is starting to dwindle. So as far as how high wheat could go, I do think we'll see a retest to the $9 level at some point in 2023. And if we can go above that or not depends, of course, further on weather and what's happening with the Black Sea region.
Definitely. Corn market, the last couple of days of the week, I was impressed with how corn, even though it didn't do a whole lot, just kind of held up and was relatively firm. It kind of chugged its way higher. It was very interesting in that corn market, Naomi. And I think here as well, we went down and tested some key support, but we kind of have moved off of that. And corn has really been the one that's been super range bound here for the last couple of months, it feels like. But I was happy with how corn kind of wrapped up the week and held in there. What are your thoughts?
Loved how corn performed this week. Absolutely. Corn being able to hold on to that 2 year uptrend was significant. And we had actually two little bullish reversals on the charts this week that just really was the way that corn could dig in its heels on that long term uptrend line. Corn, like soybeans, is still in a pennant flag formation where we'll probably go up to the higher end of that range, hit resistance, maybe kind of come back down a little bit. Ultimately, though, I think of the three grains, corn right now is the leader. I think corn has the most potential going forward. And, that argument about corn exports are behind and the USDA needs to bring it down, I don't know if I believe that because if you look at what's happened since May, the USDA since May has been bringing corn exports down. And I remember during COVID, we all were convinced, oh, we're not going to export anything, and the USDA month after month after month did not change corn exports. They kept it steady and constant. And then ultimately, the demand kind of started to pick up. And so I think the USDA, I think, has that bearing because right now we have, of course, a whole global system that is low on corn. The whole northern hemisphere did not have a record crop. The USDA, like I said, is already accounting for slightly less exports. So I think they're just kind of playing it easy, knowing that countries are going to just be buying hand to mouth, only buying the little bits that they need to get along, but ultimately over time it'll add up. And especially if there's any weather issues out of South America, you are going to see that corn market and corn exports just ignite higher.
Now, thinking about corn and beans as well, I know it's very regional, but basis has been strong, and basis has kind of been a driver in this market. If we look at the cash side, I mean, I know the prices on the board are good, but looking at cash, especially parts of the Western Corn Belt, I know as farmers have wrapped up and put the combines away, they're still seeing in many areas a pretty strong basis level that's maybe making them think once or twice about what they should do with their marketing.
Well, absolutely. The market is paying you right now to sell your corn right now. That's why we have strong markets and strong basis. So do be selling along the way here. And I know that some folks have been doing that, but at the same time, they're saying, well, I'm going to store the rest of it because we've got ending stocks that are tight. And maybe how high could this market go? So you can't be just kind of resting on your laurels and assuming things are going to continue to go higher. The market is paying you right now to be selling your grain and make sure you are watching your basis levels. That is absolutely the telltale market signal right now for anything. Cash is always the king, cash is always the leader. Cash tells us what's happening truly in the world. So watch that basis and there's people who are saying, "Oh, I'm not going to sell anything until the new year. I don't want to make any more money," and that's not necessarily the best business practice, just in case there's a black swan that happens. But do be aware with this pennant flag formation that we have for corn and beans both. I mean, without a doubt, my bias yet is still is supportive for prices. But pennant flag formations just tell us what the breakout potential is going to be for the price higher or lower. The fundamentals ultimately finally dictate where the move is going to be higher or lower. And black swans have happened,
Mhm.
and we know that. So again, just don't rest on your laurels and stay on top of your cash game.
All comes back to risk management. We want to manage that
Absolutely.
risk and take care of things for sure. Let's look livestock trade. I know cattle on feed numbers don't have those in front of me as we talk right now, but we're expecting a supportive report. Felt like traders kind of just squared up a little bit in the cattle complex ahead of the report on Friday. Hogs were down a little bit. As you take a look at the protein sector, cattle and hogs, any thoughts there to wrap up the week, Naomi?
Well, I think that, if you look at cattle, hogs, and the dairy complex, all of them are all up against some major resistance levels on charts right now. So if the cattle on feed report can come in really friendly this afternoon, maybe that's part of the catalyst for the markets to finally get through resistance and keep working higher. If the report comes out as expected, we probably see prices slide back a little bit next week, especially with the Thanksgiving holiday in there. We also need to, of course, keep an eye on cash markets. Are they staying strong? Are we going to have any additional holiday demand? And people are already thinking into 2023 where that demand is going to be. The bottom line, though, is that the protein sector is like most commodities, it's a friendlier story, but it needs some constant bullish news to get it to take that next level higher.
Well, and you mentioned this not resting on your laurels, and I think this could speak to the entire ag commodity sector, whether we're talking grains or livestock. And we alluded to this earlier. We're getting to that point. Thanksgiving, Christmas. Typically, it's a very quiet market time. As you think about things, you look towards the end of the year. Any thoughts? Anything changed with some of your general thoughts when it comes to risk management right now, Naomi?
Well, next week, usually Thanksgiving is either super quiet and very, very sleepy, or traders take advantage of low volume and we get some rocking and rolling price action, either higher or lower. A lot of times those things are short lived. However, do be mindful of seasonals. Seasonals for the grain markets do have a tendency that starting in December, the market prices will start to inch higher into the new year. And then we'll see some position squaring by the funds at year end going into the new year. So it's a balance of all of the factors right now. You need to be watching the funds, the big money in the marketplace. You need to be watching weather in South America, keeping an eye on the value of the dollar. Of course, when that dollar had that pullback this week, that was really nice. We saw our export market pick up in response quickly. So there's a lot of moving parts and moving factors in the next few weeks. Holiday trade only just makes it one notch trickier.
Well, I know if folks need to talk with someone such as yourself there at Total Farm Marketing, get a little advice about what they're doing with their marketing plan. I know they could reach you guys very easily. How could they do that, Naomi?
Yeah, go ahead and give us a call at 800-334-9779, or you can find me on Twitter at Naomi Blohm. Go ahead and shoot me a message, and I'm happy to respond and answer any grain marketing or livestock marketing questions you might have.
And they also have a great website, totalfarmmarketing.com. With that, Naomi Bloom, appreciate a little bit of your time here today.
Yep,
Thanks for
thank
joining
you.
us, and we'll get you back on again soon.
All right. Thank you so much.